It's time for the big three. We've got 3 stocks for you and 3 charts. Rick Ducat, of course, will take us through the charts, and here to take us through the picks today, Jessica Inskip, Director of Investor Research over at stockbrokers.com. Great to have you both with us as always. Now, Jessica, big picture thoughts on the market action we've seen as we start the last month of the calendar year.
Yeah, normally this is a really great month, but it's been challenging thus far. But I think that's been the market this entire year. I really think what the backdrop of this market is betting on interest rate cuts. We need an easing Fed. We need that into an accelerating economy. But more importantly, we've had really great earnings. All of that is an input into the earnings picture. And so I think that's a really positive catalyst. So I feel very positive going into year end. But of course, that's very dependent on rate cuts, which seem to be on the table. That could be due to the K-shaped economy. I think there is risk in the employment picture, but nonetheless, this is what we need right now.
Yeah, and interesting you mentioned the K-shaped economy, especially us coming off of Black Friday and Cyber Monday. And your first pick today is Amazon. And I was sort of pouring through some of the Black Friday data that's already come out. And Rufus was mentioned in pretty much every article I read about its conversion rates in terms of shopping on Amazon and how impactful it was to the holiday shopping season, at least for the Black Friday, Cyber Monday stretch. Walk us through this pick here.
Absolutely. That's a powerful headline that has to do with Rufus, though, because the big question that has been on our mind is how is AI going to translate into revenue? And more importantly, the consumption economy and targeted ads. And Amazon is showing us that. Not to mention AI is back in the spotlight with what they're doing in AWS. And there's a lot even going on today. So AI is really materially lifting Amazon's conversion, advertising, even logistics efficiency. And I think that's positioning Amazon to be a multi-sector growth story, especially heading into 2026. So today there was an announcement of grocery expansion. In addition to what else is going on, that could accelerate same-day delivery. It was 2,300 cities they were looking for, but there's tests right now. That's a 30-minute delivery in Seattle and Philadelphia. And if we look at their Q2 revenue, it was up 13%, but 23% was worth ads. And bringing that into how Rufus could add to next quarter's revenue, or what we're looking at, they boost conversion. It was up 100% in sessions utilizing the AI assistant alone, and that's from Rufus and external data. So I think that is a valid use case for artificial intelligence, how it translates into revenue, and more importantly, targeted ads. That's what I want to see.
Yeah, Adobe predicted that those AI chatbots were really going to change how the whole shopping season worked. And the data that I've seen so far says that they were spot on in those predictions. But Rick, as we take a look at the charts for Amazon, it was one of those companies that was, not being talked of as at the top of the Mag 7, and they've had some good performance of late.
Yeah, it's a bit of a reset, I guess you could say, overall, because what we saw for several months here was kind of range-bound trading activity in this area between about 211 to the downside, 233 to the upside, roughly speaking here. Then we had a breakout on earnings. We hit these highs near 258.60, but then we retraced almost all the way back down to that same level. We came short of that general area, but now we have rallied once again, and we're starting to push to the upside beyond this trend line here. Also, pushing beyond our 233 level. 233, if we were to backtrack a little bit, you can see it was an old notable high from all the way almost a year ago here. So now when we look at our RSI study and our moving averages, we can see that our moving average that is closest to us is our yellow 21-day exponential moving average here, quite close to our orange 63-day EMA as well. So we broke above our trend line. We broke above our moving averages almost about at the same time here. And we got a corresponding breakout in the RSI, not only above its trend line, but also above the 50 midline. So a lot of interesting technical factors are coming into play here. We can see that was a bit of a confluence that we broke through to the upside. That's the kind of thing traders often look for. When we do see our volume profile study, right here, our point of control, our linear regression line, our line of best fit, our teal line there, and our moving averages all kind of lumped together between about 220 to 230. So that's pretty much the obvious supportive area that the bulls would be looking to hold. To the upside, +1 standard deviation channel lines up with an old high as well in our red line here around 242. That could be a point of further interest to the upside.
All right. And so our next one, though, you have a trade for us on this one. I'm excited about this. We've got Southwest Airlines. They've had a really good month. The last month up 16%, but up year to date, About 5%, 5.25%. And you'll walk us through Southwest.
Yeah, so this initially showed up on my technical scan where I look a crossover for the 13 weekly moving average over the 26 weekly moving average. So 1 quarter worth of prices versus 2 quarters worth of prices, which would actually show up if we think about the price momentum that's happened within the last month. I want to see 1 quarter, these rolling quarters really showing price improvement. So this is purely from a technical play. Digging into the fundamentals, airlines is something that I really try to stay away from in the most part, even Warren Buffett does if you want to dive deep into that strategy. But from the technical scan perspective, I like it. It does have a 2.07 annual dividend yield. Looking into some of the business strategy, they are shifting more from budget to mainstream with adding seat assignments, long haul routes, even first class considerations, lounges, but that has high CapEx. And when we have high CapEx, we want to see that also come with a clear path to probability. And that's a little bit uncertain, which leads to volatility, but volatility leads to premium, and that's where options come into play. So I'm looking at selling a cash secured put about 45 days out at $35 strike price. What this does is I'm creating an obligation to buy the stock at $35 per share. And in exchange for that obligation, I'm getting a premium of about $2 per share, 200 total. That represents a 5% plus, even getting close to 6% premium over that 45-day period. So it's really compelling from a structural trade perspective with the technicals aligned with it. So it's not a growth story, it's an income story. And the risk, of course, is equal to stock ownership at 35 per share, but offset by that $2 premium. So about $33 per share.
All right, Rick, so as we look at the technicals, knowing that Southwest trading at about 35.23 right now, what are they indicating for us?
Yeah, so the area between about 34.40 to 35.24, to be very precise here, that's an area that I had highlighted here because it represented old highs here and here. You can see this is kind of where price would get stuck often. We had our big breakout here. Notice that the low point here was that old high once again, 35.24. But then after things fizzled, we had a very sharp pullback here. From there, we solidified right around 29.35. Range-bound choppy price activity with the 34.40 line as our rough upper boundary once again. Now we find ourselves kind of stuck within that same area here. So this would be the zone of interest right now to the top and bottom here, 34.40, 35.24. But overall price within this upward sloping channel type shape here between our two white dashed lines. Still kind of grinding out a higher close here, on pace for it today at least here, but not any significant intraday highs so far. Moving averages starting to diverge apart from each other. The faster ones are starting to outpace the slower ones, which is a sign of a trend improvement here. So look for the yellow 21-day EMA to potentially be support in the coming days. Right now it sits at about 33.20. We can see RSI also is enjoying an upward trend here for the bulls. Not quite making a new relative high yet, though. That would be one thing to look out for, because otherwise it would start to be a bearish divergence in the RSI at a time when prices potentially failing at a resistance point here. That would not exactly be what the bulls would want to see. Finally, we can see here that our point of control, kind of similar to our last chart, everything's kind of lumped together in the middle. In this case, though, between about 31 to 33 is where everything comes together. But we're above that point now. We're above our +1 standard deviation channel. To the upside, we have a small volume node near our +2 standard deviation channel that lines up with those old highs. So that could be one thing to look out for as well. Just a quick visual too. Here's the 13 and 26 moving averages, weekly moving averages crossing over each other on this longer term chart, at which we are near a major volume area on the verge of breaking out to the upside.
Yeah, and right near where Jessica structured her trade as well, because we are at 35.13. Now, this last chart looks a little different than the other two, also in a completely different sector, much more upward, consistent momentum here. We're talking about Citigroup.
Yeah, I really like Citigroup for various reasons. So one, it showed up on my high quality dividend scan. This is where it came from. And it's been on that scan for quite some time. And this looks for longer term plays. But I also like the transformation and the executive reshuffle that's happening. We're seeing that really accelerate and reshaping how Citi is entering into this wealth centric era, if you will. So a couple of changes that's happened. They have a new CFO, part of that executive reshuffle. And that's really marking the next piece of their strategic phase under CEO Jan Fraser. She's going to be there about 5 years in March. And so we're seeing how this business model is really realigned under her. Now, additionally, there has been, Citi has folded its U.S. retail deposits into wealth, which is non-traditional, and cards are becoming its standalone segment. And I think this is actually diving deeper into more of the tech and digital asset angle and exposure that Citigroup has. This reorganization really mirrors how Citi has pushed for tokenization. If you listen to a lot of interviews with Jane Fraser, you can hear about stablecoin rails and the next generation of payment infrastructure that she is behind. And I do think that's something that's going to expand, as we call it the AI rally. I've been trying to call it the efficiency rally, and that has to do with tokenization and even the market structure discussions that are happening today within the White House and fiscal policy, I think are going to help with that clear path to profitability and momentum forward. So I think it's consistent with its broader modernization strategy. And as far as why it shows up on the scan, it's got a 2.34% annual dividend yield with a 32% payout ratio, which means it's not giving all of its earnings to that dividend, which gives it room for growth. So strong free cash flow, supporting ongoing dividend growth and capital returns.
All right, Rick, so we take a look at the technicals here. I see that we've got our upward movement, but it seems to be leveling out a bit here. What's the technicals telling us?
Yeah, I mean, even the strongest stocks sometimes need a consolidative phase here. Not saying it's going to keep going up or anything, just saying, you know, you're right. We are in more of a sideways period here. So the notable levels that stand out are 96. You can see that that was a stopping point a few times. That's about where we found our lows in terms of our closing prices as well. We did have one that slipped below that area here. But for the most part, sticking along with this trend line here, some intraday pushes beyond that level. But once again, stopping near that 96 line, our green line there. 103.49, that was our best close from right here. That's about the boundary where we've topped out 2 more times. So on one hand, you would have this sideways range. On the other hand, you could draw more of a triangular type shape here, suggesting that we still haven't seen a high that's taken out that previous intraday level near 105.59. So we can see, though, that we are near the upper end of the range. We're near the breakout point of the triangular shape here. We're above our moving averages. 21-day EMA comes in just below 101. RSI moving upwards still above the 50 midline. Higher lows here. But like our last chart, not really making that higher relative high just yet here. So break in price, break in RSI to the upside, same deal, would be what the bulls would want to see. So finally, we have our volume profile study here. Small volume node lining up with our 21-day EMA near about that 100 level, 101 level. So that could be supportive to the downside here. Also the 96 level, our green line here. You can see that's the standout volume area right here that really is the most notable close to current prices. Beyond that, though, 105.50. The intraday highs, that's the mark to beat.
Yeah, and we're only about 2% off of those 52-week highs, that 105.59 that you're mentioning right now at 103.63. Want to thank you both for being with us for Big Three. Rick Ducat, of course, our lead market technician, and Jessica Inskip from stockbrokers.com.